Hey, everybody, welcome back to the show. Today, I have my buddy Forrest McGhee here. He's out of Richmond, Virginia, real estate investor there, a member of our Investor Fuel Mastermind. And Forrest is really big on the construction side, owned a construction company, really, really buttoned up with rehabbing. But now he's kind of pulling back a little bit. So we're going to talk today kind of about smarter exit strategies and kind of how to keep your finger on the pulse of what's going on to make sure you don't over rehab in this market. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Hey, Forrest, welcome to the show.
Hey, how you doing, Mike?
Good to see you again.
Thank you. Nice to meet you.
For those of you that don't, probably none of you would know this, we actually had a little trip for our Investor Fuel Mastermind. We went out to Yellowstone here right before all the coronavirus stuff hit and went snowmobiling and dog sledding out there. And Forrest and his wife were in that group. So we had a good time out there.
Yeah, we did.
Yeah. We learned a few things. We won't get into many details, but Forrest is a grill master. So if you know Forrest and you didn't know that he's a grill master, you should talk to him about that.
Yeah, come by. Right?
Yeah. So Forrest, you've owned a construction company in the past. Actually, why don't you just go ahead and introduce yourself and tell us a little bit about your background, how you got into real estate investing.
Yeah, thanks. So my name's Forrest, and I got into real estate investing because I thought it was easy. And as you said, I'm from Richmond, Virginia, and I've been a contractor for about 14 years. I'm still an active general contractor and electrical contractor. I got to where I wanted to be my own boss, and so I said, well, what better than to flip real estate? So I went and tried that a couple of times with a couple of people and figured out that I'm much better doing it by myself. And so I did that on my own and got pretty good at it. And everything I do on flips, I do pretty good with. I haven't, had a bad flip yet. I've had some go over budget. Actually, probably all of them go over budget. But, this is the way it works, right? You kind of have to plan on that. And as long as you buy your houses right, you'll end up getting out of it safely, and you can live to do it another day.
Yeah, I've known a bunch of contractors over the years, and some guys that do like luxury homes, and I just finally had to tell them, like, look, you guys should not rehab anything because they don't know how to not over rehab it. They're going into a $150,000 house and putting like $1 million home like elements in there, and nobody expects that, but the bar is really high for those guys. So I think for all contractors, you have to be careful because you sometimes it's not that everybody wants to be proud of their project, but you have to be proud of it and stay inside of the kind of the buy box of what somebody expects at that price point, right?
Exactly. So I think that, our job is to create, a safe, a clean, affordable house for people that they can kind of turn into their own eventually. So, we're heavy on making sure that the kitchens and the bathrooms are done very well. No matter what the price point is, we're doing nice granite, we're doing nice cabinets. But if you go on to if you go shopping, if you go thrift shopping on Amazon, right, some people are buying, $6, $7 doorknobs, right? My doorknobs are 90 cents a piece. And so, I just don't spend money where it's not necessary because somebody's going to yank that crap out and they're going to put something else in there anyway, right? And so, it's just, I look at it like, how much of my money do I want to give the buyer? And, that's really how I look at, how I rehab a house. So.
Yep. Yeah. And I think that differs in different markets too. Like expectations are different. Like when you're in a seller's market, like what we're coming out of here, and it depends on the neighborhood too, right? If you're in a market where the sellers are used to earning sweat equity and they're okay doing some of the work themselves. Like you have to kind of look at the competition and see what else is out there. But I think the market we're entering maybe is more of a buyer's market than a seller's market. And so you would tend to not want to over rehab in a potential down market because people's expectations change. It's kind of what you said. They want more safe and clean more so than all the bells and whistles, right?
Yeah, so everybody likes to brag, right? And so when you're buying a new house, right, or you're buying a new car, you're going to go and you're going to show off all these little features, right? If it's a car, you're going to show off the GPS, or you're going to, flash the LED high beams or something like that, right? And in the house, you're going to go straight to the kitchen and you're going to look at this fancy little thing, or that nice faucet or whatever. So you definitely want to give people some impact, some bragging rights, but you go to Home Depot, you buy a $200 faucet, it's the same faucet as the Amazon $70 one, right? It doesn't matter. And so, knowing where to stop and knowing where to spend your money, it just makes sense at this time, right? You don't need the $200 ceiling fans. They don't shake just like the $70 ceiling fans don't shake. And
Right.
so we've just gotten very good at putting our money in the right places, and most of the time that's trying to keep it in our pocket.
Yeah. And that's even more important in a potential down market because you just can't afford to over rehab, right? People are not necessarily, you're not going to get as high of an ROI on that investment as you might in an up market, right? So
You're only going to sell the house for what the house is worth, and it's based off of square footage, right? And so you can overspend all you want, but at the end of the day, your sales price is going to be your sales price, whether that crap's plated in gold or whether it's plated in Chinese brushed nickel.
yeah. You know what? It was an eye opener for me. This is back around the time that I started 2008. This was probably like a 2009 house, one of our, early on in my investing career. I kind of set these parameters just based off of some mentors I had or people that I kind of followed around me. Is like, hey, I'm not going to rehab anything under $100,000 market value because I'll probably over rehab it.
Mm-hmm.
Then there was an exception. So I'm like, okay, I bought a house for, I don't know what we bought it for. I think we ended up selling it for like 89.9. It was, but we bought it for obviously way less than that. And I decided to rehab it. This house has a whole other set of stories around it with like the cops, drug dealing, what is it called? Sports, like gambling ring, like all kind. I won't even get into it, but it's got actually, this house has a whole bunch of stories associated with it. But and at that time we were selling houses by owner, which is like terrible. Like they just basically was a horrible use of our time, but it was like an early lesson of like, okay, that actually was the straw that broke the camel's back. I'm never going to sell a house by owner again because I don't want to have to keep going to show the house to people that don't even show up half the time. But anyway, that's not the story. The story here is we over rehabbed it a little bit. Like I didn't think that we did, but there were people that would come to look at the house. And again, I was like going down to show it. And you would have thought they walked into like the Taj Mahal. They're like, oh my God, this is so nice. And in my mind, I was like, well, we just put laminate in. We didn't put granite in back then. This was like '09. We painted the countertops with like an epoxy paint. It looked good. But in my mind, I was like, I wasn't real happy with it I wasn't proud of it from the work standpoint. But the perception of what the person expected for a $90,000 house was very different.
Yeah. So, in my market, these people are walking in with, basically no money down, right? We build our price and our agents, because I don't ever sell a house by owner unless I'm wholesaling it.
Yeah.
I use an agent for everything.
Yeah.
And
I do too now.
yeah, I mean, they're totally worth, it's totally worth the 3%, right? Because a buyer is going to bring an agent. And,
Right.
So you're talking about 3% of your price. It doesn't make sense to do it on your own.
Yeah.
So, you know, these people are getting in with no money down and they want the most bang for their buck. But at the same time, there's different price points. And, it just makes sense to buy the $1 per square foot tile as opposed to the $5 per square foot tile, right?
Yeah.
Save that for when it's your house and you want to go blow your money on something.
Right.
But, their kids are going to, damage it whether it's $5 a foot tile or $1 a foot tile, the kids are going to throw crap on it. They're going to spill things on it. They're going to, they're going to ruin it. And, it is what it is. So as long
Yeah.
as it's safe and clean, I'm fine.
So the impact here of the down market, like what are you doing differently? So you since you've been a contractor, you have a tendency to rehab more. You kind of prefer that. I know you've been doing a little more wholesaling or shifting that direction, even though it's not what you would prefer to do, just because it just is the smart thing to do in this kind of uncertain market, right?
I definitely have I can fix that mentality. So, with anything, I see a house and I can fix it, right? And, I always have to like have the little angel on my shoulder go, no, you're wholesaling this one. So, uh, that's what I'm doing more and more now because I have to, right? With this market, one, we don't have a trend on where it's going, whether it's going back up or whether it's going down. So the best thing to do is, get houses at a fair price and sell them to somebody at a wholesale or a wholesale level at a fair price. And, when you deal with first time home buyer markets in B neighborhoods, C neighborhoods, those trends don't go up and down that much. They pretty much stay the same. It's a safe bet, especially for buy and hold people, that are, repositioning their money or putting IRAs to work or what have you, which, most of our lenders are doing IRA work. And they just want to put their money somewhere and have a guaranteed or more or less a guaranteed return and not deal with the emotional roller coaster of the market. So, if, people who are doing that, they're gonna have some safety there. And so you just have to bring the product that the people want. And that product right now is, fairly stable housing.
Yeah. Yeah. And you shift a little bit too, and you do some lease options there, right? And so I think that market is still probably more stable than, because people are, they're not necessarily buying the house, they're buying the option to buy the house, right? So they're probably less worried about shifts in market value at the time they agree to an option. Would you agree with that?
Yes. So, a lease option, the whole lease option model works off of what can I rent it for? And so, as long as that model works and, I have, a few $100 threshold on what my cash flow is for, my business management. And, as long as that model works and it works, and then, we just try to capture as much down payment as possible.
Yeah.
And, the option payment is just that, right? It's an option. It's a, maybe you do, maybe you don't. And, one of my first mentors said they're homeowners in training. And so, you kind of have to train them up and, it's success is built on you, right? It doesn't stop in a lease option. It becomes a relationship. You have a relationship with the seller and you have a relationship with the buyer. And, me personally, I enjoy the relationship part of this business. I've done virtual wholesaling, I've done virtual real estate, but I enjoy solving a genuine problem and giving a genuine opportunity to somebody that's grateful. Right. And,
Yeah.
last year we got some Christmas cards from some of our, lease option tenants. And I was just like, that's cool. Right. That makes me feel good. That makes
Yeah.
me want to keep doing it.
Yeah.
So, but lease options are awesome because, and, subject to use for that matter, but, I'm focusing on lease options right now and seller carried financing because there's really no risk, right? There's reputation risk, but there's really no risk. There's no money out of pocket to get into the deal. Maybe one or two mortgage payments, maybe paint a couple of rooms, put some appliances in, get it, appealable to somebody that wants to go in and finish it off.
Right.
So, yeah. So, that's something that a lot of people don't hit because as we're pivoting, right, everybody has to pivot right now. And as we're pivoting, wholesalers are saying, oh, if it doesn't fit my, model of 65, 70%, I'm not going to return a phone call. Whereas if I can make, $3,000 to $5,000 a year return on just architecting a deal and becoming a middleman, why not? Why
Right.
not?
Yeah, especially if you use it as a way to monetize the deals that you can't make work any other way. Like if they don't accept the cash offer, well, here's a creative way we could do this. I mean, you're helping the seller solve the problem, which, you know, you shouldn't, we all want to help more sellers solve problems. You shouldn't do it if it costs you money, but if you have a way to make money doing it and help somebody in the process, even if it's a lower margin than typical, like why not? It helps offset your marketing cost, if nothing else. And it helps that seller out of their situation, right?
Absolutely. The great thing about it is, these lease options, they give me enough to do to keep me interested. So I can like go in and play a little bit, hire a couple contractors and, but I'm not rehabbing the entire house. So it gets back to our original point of, not overdoing it, right? I just get to piddle a little bit, just enough to keep me interested, give me something to go do. And then I turn it over to somebody else to finish it. And
Yeah.
that's usually the end buyer.
And I think when people get creative deal, when they buy in a creative deal, whether it's you owner finance them or it's a lease option model or things like that, they kind of understand that there's a little more sweat equity involved. Like it's not perfect. It's not, top of the line house. It needs some work, but that's what you get in exchange for us allowing you to have this flexibility, right?
Absolutely. They're trading, retail level house for an opportunity.
Right.
And, that's really the way that you try to frame it, so that they can look at it in that respect.
Yep.
And you're giving them a chance where other people haven't.
Right.
And most
Right.
people are grateful for it. And, just one more thing, we're dealing with these leads, right? They're either hitting our PPC or they're coming organically through SEO or some other paid marketing channel that they slipped in. So yeah, you got to monetize that deal if there's a way possible and they're not a real pain in the butt, monetize the deal one way or another, right?
Yeah.
So,
Yeah. So, Forrest, any other thoughts on how folks should look at their rehabs? I mean, obviously, we're kind of talking to people, all the people that are Investor Fuel, people that are in my coaching programs, people that we kind of advise are like, hey, you should be doing stuff has a faster cash cycle, right? Like, don't take on huge rehabs that take, 3, 4, 5 months to rehab, and especially if you're in areas with lots of permitting, which a lot of that stuff's closed down right now. Like, don't take that risk. Like, find ways to do more wholesaling or wholesaling. Any more thoughts on that, or how to simplify rehabs right now? People are still, let's say for inventory they already own that they're in the middle of a rehab. Like, what are some things they can do to kind of simplify the model and hopefully get that turned into cash faster?
yeah, it kind of depends, how bad they got themselves into the rehab. But
Yeah.
some people are great at doing the gut jobs, and some people have very inexpensive money. But for people of my mindset and of me want to be in and out of a deal fast, turn them over as quick as possible. Less is more, right? You're not living there, and as you and I have seen, as walking through as many houses as we've walked through, everybody's standard of living is different, right? So what you think is ugly paint might, not be ugly. And, what you think as, low quality laminate floor might be, what somebody's always wanted.
Right.
So, level one granite, some people have never had granite in their life before. They don't know what level one is. They just think it's all like, from heaven, right?
It's all
So
granted.
yeah, it's all granite, right? They don't know.
Yeah.
So, don't take your personal taste into the projects. Just, clean, safe, quick, get it over with, and sell it as fast as possible.
Yeah, yeah. Yeah, and you can kind of keep your pulse on that too by looking at recent solds, recent pending activity, like just see like what did they do, and what price did they get relative to what I think I can do for mine. So I think sometimes if you see a simplified rehab, especially when you're in a little bit lower end market or part of town, if you can see the quality of the rehabs that made their house go pending faster than other houses that were overdone and higher priced or whatever, you can kind of get a feel for what's the quality level and price point that buyers in that neighborhood are looking for.
Yeah, I have a lot of fun in my business, and one of the things that brings me humor and joy in this business is, my wife has a staging business, and so what I get to do is like sometimes we run around. We spend uh, a lot of time together, and so sometimes she'll get like a phone call and say, "Hey, can you give me a price for this house?" And we're already out. We'll go by and look at it, and I'm like, "Yes, right." I get to go look at somebody else's rehab and go and critique it, and see what they did well and see what they didn't do well, and see what I would have done differently, et cetera, et cetera. So.
Yeah.
Uh, Definitely, getting to see that and then see what actually sells quickly is an added benefit. But yeah, we have our finger on the pulse of, retail sales around here for sure.
Yeah, yeah. And even if your wife's not an awesome stager, you can look and just look at the MLS, just see what's moving. Like what went active and has just been sitting there for 30 days or more. And
Yeah.
what went active and went pending after day one,
Yeah, everybody talks badly about it, but Zillow is my best friend, right? It really is. I mean, they have more information easily accessible than you can get on just about any other website, unless you're a real estate agent.
Right.
Or you have, a real estate agent that's willing to do a lot of work for no money for you. You can just troll neighborhoods like that, and it's really a great resource. So I use it all the time. My wife uses it in her business. Our admin person is always tracking the properties, because we always track all of her properties in there and when they're going and stuff like that. So,
yeah. You can set up alerts in Zillow too to like see changes status. Yeah.
It is a great resource. I don't know why people talk so badly of it, but
well, it's mostly agents that feel like they're going to lose something, but
they will.
Yeah.
Eventually they will, right? The virtual real estate agent's coming.
Yep. Cool, buddy. Well, hey, so you've been a member of Investor Fuel for, I don't even know how long now. Wow. But it's been about a year and a half
Yeah.
or so. Yeah. And so you've been an investor for a while. Would you mind giving just a testimonial and just kind of share how Investor Fuel has impacted your business and your life?
Yeah. So I was doing under 10 deals a year when I did Investor Fuel, and I really had no direction or traction. I found out about you guys I went to Carrot Camp, and I got a free pass, and the free pass cost me a lot of money, but it's just been an invaluable resource. Really, my return on investment with this group has been great. We have cell phone access to you and Stinson, and we have access to everybody else in the group. Everybody's giving and caring. I've been on phone calls and Zoom meetings with other investors in the group one-on-one, that just give information, right? And it's just an open source of people wanting to help people, right? That's really, I think, what Investor Fuel is about. It's just really wanting to elevate everybody. And there's some well-to-do people in there, but there's really no egos to speak of. I think everybody's willing to have a conversation with you, no matter who you are.
Yeah.
So yeah, I really enjoy it. And so we've tripled our yearly count just by being an Investor Fuel, and just by having the resource of going there and getting to talk to people and get a little jealous and of how great everybody else is doing, and go home and try to figure it out and reverse engineer it to work for you. So yeah, I love it. I'm really excited.
Awesome. Thanks for that. Yeah, it's interesting because I think a lot of people, it doesn't take much in our business to really move the needle, right? Some of it's a little turning up the confidence a little bit by seeing like, oh, I've been thinking about doing this for a while. It's not as hard as I thought it was, or, and not to take anything away from any of our members, but sometimes when you see, not to say anything bad at all, but like sometimes you're like, well, if that guy figured it out, I can figure it out. Like this isn't, not to say anything bad about them, but it's just sometimes you realize that we make things harder than they really have to be, right?
Mm-hmm.
And getting around people that are open and willing to share. And I think, that's the culture that we have, is that people often come, we hear this all the time, because they have to give something to come. When you come, you have to give, share a resource, and people are always really worried about giving back. And then when they start to be a part of the culture, they're worried that they're not giving enough because they've gotten so much. And I think it just creates this kind of flywheel of, I feel like I owe more to people in the group because I've gotten so much out of it, which is a cool thing to have.
Yeah, my give for my presentation is always my most difficult part, because it's like you want to provide value, right? You want to talk about I read this I read this short story last week. It really helped me helped me out, right? You really want to impact people when you go there. And
yeah. Well, we're glad you're there. So Forrest, if folks wanted to learn more about you, you're investing in Richmond, doing some deals there, learn more about what you've got going on. How can they connect with you?
Yeah, so my brand is forrestbuyshouses.com, and I'm Forrest Buys Houses on Instagram and Facebook. And you can reach out to me and we can talk. I mean, we have there's other people in Investor Fuel that, have some students and stuff like that. And, they've bounced off of me before. I've looked at deals for, some of their students in our area and, helped them analyze properties and stay out of bad situations and stuff like that. So,
Cool.
yeah, if you ever need to talk to me, we're all here together and we're all here to work. So
awesome. I'll put those links down below in the show notes here for those that are watching right now. So, hey, good to see you, my friend.
Good to see you.
Thanks for joining us today.
Thank you.
Hey, everybody that's watching right now, thanks for joining. Hope you got some value here. If you haven't yet, by the way, our next Investor Fuel meeting is coming up here in just a couple of weeks. So if you haven't yet, you should go to investorfuel.com and just schedule a call with us and just talk about what's going on in your business. We tend to try to get to know people and see how we can help them first. And there's never a hard pressure sale or anything like that to join our group. We want to make sure you're a fit and that we can help you. So, but you can go to investorfuel.com to learn more about that. Wherever you're watching this right now or listening, whether it's YouTube, iTunes, Stitcher Radio, Google Play, anywhere like that. If you haven't subscribed yet, we'd love it if you subscribe, follow along with us here. If you got some value, if you could leave a positive review, that would be great. You can access all of our shows by visiting investorfuel.com as well. So until the next one, have a great week. Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.